What's going on, guys? I'm your mentor, Arkhamtrades, and in today's video we're going to be doing a trade breakdown, going over how I made $5,600 in only 20 minutes this morning trading the Dow Jones, as well as I'm going to give you guys the exact executions of where I got in, where I got in, why I scaled in, where I scaled in, and where exactly I got out, so you guys can not only watch this video as well as implementing it into your own trading and hopefully pass your prop firm accounts and make your first $10,000 trading. But before we begin, make sure you guys click that like button. It only takes 1 second and it helps the channel greatly. Thank you. The first thing we're going to be going over is the pre-market analysis and what I was looking at this morning, which I give away for completely free inside of the free Discord community. So if you guys want to join that free Discord, it's the first link in the description. I was a little bit more patient and I wanted to see how did price react at these two specific levels. We have this level of resistance above us, and then we have this level of support below us. So as we're in the middle here, I want to create if-then scenarios. If price were to come lower and break through these levels of support, this would then create a trajectory to where I could anticipate a retracement for a continuation back lower. If price came into this level of support, maybe consolidated here, and saw a push higher, I could then frame a long entry, reaching back above higher prices. When creating a day bias, it's very simple. It's marking out your key levels of support and resistance, marking out your liquidity pools, and being patient, creating those if-then scenarios. And obviously, after we created this daily bias here this morning at around 9:15, an hour later, we mentioned this trade here, which we made a little over $5,600 on the trading day using that exact analysis that we showed. To the daily time frame here on the Dow Jones, on the daily time frame, we want to mark out our levels of liquidity as well as any potential higher time frame support and resistance. I'm going to mark out these previous day highs as well as these previous day lows as our higher time frame levels of liquidity. Right, if price breaks back below these previous day lows, most likely we could see a retracement back into this previous day range for a continuation back lower. Either price is going to take out the previous day high or the previous day low. The second thing that could potentially happen is price take out the previous day highs and the previous day lows. And then the third thing that could potentially happen is if price doesn't take out the previous day highs or the previous day lows. Right, and the first, which is price either takes out the previous day highs or previous day lows, happens around 80% of the time. And then the other two, which was taking out both sides of liquidity or none, happens about 10% of the time. Just using this data alone, we can use it to frame a bias of where we're anticipating the market to go based upon the day time frames. You see, this day price took out these previous day highs, then took out previous day highs once again, until we started reaching a downtrend where price started taking out previous day lows. So for a consistent amount of time, price have taken out either a previous day high during an uptrend or a previous day low during a downtrend. As well as we do have this daily bullish fair value gap. This daily fair value gap will simply be used as a potential draw on liquidity. This is an obvious gap that we left inside the marketplace that price left unopened. Right, when price creates gaps inside the marketplace, price tends to come back into those gaps to potentially use as support to reaching back higher prices, or price could break through this gap for an inversion move, reaching back below lower prices. For we know the most part is price is most likely going to seek back down into this gap. So we're going to use this daily fair value gap as a draw on liquidity. When the marketplace opens and we can see prices making an effort to reach lower, this daily fair value gap can be our draw on liquidity to where the marketplace could reach down into. We're going to be coming down to a 4-hour time frame, and like we mentioned, we had those previous day highs and now we have these previous daily lows. And as we can see, the marketplace throughout the London session did come lower to take out those previous day lows. As well as for the Dow Jones, we have been in an overall downtrend, and we have that daily bullish fair value gap as a potential draw on liquidity. So just keeping things very, very simple. We're in a clear downtrend. We took out the previous day lows, as well as we have a draw on liquidity down into this daily fair value gap. So now what we want to do here is mark out our potential points of interest of support and resistance. And the first thing I want to take note of is this 4-hour bearish fair value gap, as well as I'm going to take note of this 4-hour bearish order block, as well as above this order block level, we do have this rejection block. As we can see, these bodies remain equal, but this wick is much longer than this previous wick. So from the equal bodies to this longer wick then creates our rejection block, and that's known as a level of resistance inside the markets. On the 4-hour time frames, keeping things very simple, marking out our premium levels of resistance from this bearish fair value gap, this bearish order block, as well as this bearish rejection block. So if we can see price come into either this level, this order block, or this rejection block, and we could see a lower time frame break, then we can reassess and potentially frame a lower time frame entry to reaching back below lower prices. we've already taken out the previous daily lows. So the market is already indicating to us that price is potentially going to seek back lower prices, as well as we are in an overall downtrend. So this just further adds to the additional confluence of lower prices. The 1 hour time frames here, we do get additional context where we do have this 1 hour bearish fair value gap is obviously inside of this 4 hour bearish order block. So this specific level or this specific range between this order block and this 1 hour bearish fair value gap is a key level of resistance. What I'm going to do here is I'm going to mark out this rectangle from the low of this bearish order block on the 4 hour to the high of this bearish fair value gap here, and this would then be marked as our premium level of resistance. See price come into this level and see some type of lower time frame break from it, we can then frame a short entry reaching back below lower prices, continuing that momentum lower, and our draw on liquidity as of now would be these lows right here. When it comes to marking out areas of liquidity, it's important to pay attention to the overall trend. Since we're in a downtrend, most likely going to seek recent areas of liquidity, which are these previous lows. Price is in an uptrend going back above higher prices. It's going to seek recent areas of liquidity, which would be these old highs. So since we're in a downtrend, if price can come into this level of resistance, find a measurement of rejection, then these old lows would then be our liquidity pools, keeping things very, very simple. So if price were to break above this level of resistance, then we could maybe frame a pullback for a continuation back higher into this rejection block up here, or maybe back up into these previous highs. And this is what I was mentioning in the pre-market analysis when it came to creating my if then scenario. If this happens, then I'm going to do this, but if that happens, then I'm going to do that. So we're down on the 15 minutes time frame here, and the 9:30 is just about to open up. Now during the 9:30 is the stock market exchange open, where we do see an influx of volatility kick in. So I'm anticipating price to potentially come back up into this level, and on the lower time frames, if we could see price consolidate and potentially see a break, I could potentially frame a short reaching back below lower prices. So obviously we can see the 9:30 opened up, gave this drop lower into this last on close candle, which is this 15-minute order block, before then reaching back up into that level of resistance that we talked about, which was that 1 hour bearish fair value gap, which is in alignment with this 4 hour bearish order block. Now I'm going to go down to a 5 minutes time frame and see if we can get that lower time frame break. So we're down on a 5 minutes time frame here, and as we're inside of this higher time frame level resistance, what I'm looking for is a level of exhaustion. We're at a specific level and price is struggling to continue back higher, right? Once we reach a level of resistance, you want to see price struggling to break above this specific level, kind of like if there was a ceiling and price keeps hitting its head on top of the ceiling. If we can see this specific pattern recognition at this level of resistance, this would then give me the indication that buyers are not willing to continue to mark price higher. Instead, it's most likely going to see a drop lower to where we could maybe see a retracement move back into that same resistance level for a continuation back lower prices. So we're utilizing the higher time frame points of interest, which is this resistance level, and on the lower time frames, we want to look for the key characteristics indicating that buyers cannot continue pushing higher past this point. Sellers have to start stepping in to where we can then finally frame our short entry. So as we can see here, we got this last down close candle with this rejection wick. What I like to look for is kind of like a bearish engulfing candlestick, potentially breaking back below this last up close candle. Price closes just back below this last down close candle with this bearish engulfing candlestick perfectly. This is what we call a CISD. A CISD is when we tap into either a higher time frame level of resistance or a liquidity pool, and then once price breaks back below that last up close candle with a body close, this then now creates a bearish order block to where we can anticipate price to come back into that bearish order block to reaching back below lower prices. These are the specific characteristics that you want to look for. As price was dropping lower, I've already taken my short position as price broke back below this original low. And the reason why I took my short position before the CISD happened is because of experience. I already knew price was going to create a CISD and find resistance at this specific level, so I was already predetermined to take my short here, reaching back below lower prices. But if you are a new trader, I'd highly encourage you to wait for price to break back below this order block level, and then you could frame a short as price reaches back into that same last up close candle and then go lower. Just reaching back below lower prices here, price does create this bearish fair value gap. This would be a great area for me to then scale into my winning position. My stop loss just back above this previous high, maximizing on my winning positions. As we can see, price comes back into that fair value gap plus order block level, and we see this immediate rejection to the downside. Just about 20 minutes, I was able to snag $5,600. Price does eventually come back higher to give you a retracement. It came back into that same fair value gap level once again before then reaching back lower prices. Miss your entry down here. Wait for the marketplace to give you a pullback and then capitalize on that pullback and then reach back lower prices, because 9 times out of 10, price is going to give you another opportunity to get in. So there's no reason of feeling FOMO or chasing the markets. Just be a chill guy and wait for the marketplace to come to you. So that's going to be it for the video. I hope you guys got a lot of value. And if you guys want access to daily live analysis like this every single morning, as well as live trading, as well as a free 5-hour trading course for completely free, you guys can click the first link in the description and join the Spark Train community. Subscribe if you're new to my channel and comment what you guys want to see next. I'm your new mentor, Arkhamtrades. Be safe.